Hey everyone, it's Evan here from the Trade Risk on Tuesday, January 23rd, here with a midweek market recap video. We're going to cover all the major markets and current market environment. We're going to skip the sector analysis in today's video. We'll keep things a little bit shorter and focus just on the market environment and major markets. So let's jump in here with the S&P 500. You can see we're up 55 cents here on Tuesday, up 19 bips on the day. And if we just take a look at where we are price-wise, you can see we have extended to new highs here. We are extending even more so away from some of these fast-moving averages. If we look at the MACD here towards the bottom of my screen, you can see that's printing new highs. And in fact, if you go to the weekly chart, you can observe essentially the same exact behavior. This trend does continue to extend itself to new all-time highs away from the moving averages. Momentum is at its highest reading going back to certainly the past 10 or so years at least, and bulls very much in control, not letting up, relentless. So we talked a lot about this environment overall. We went sort of in depth into a couple of different scenarios in last weekend's video, on Friday's weekend video. Talked about the blow off top scenario, talked about just where we are and how to navigate this market. So I'm not going to go too in depth because really the structure of this market hasn't changed. We're simply just a little bit further along here in this uptrend and in this rally, in this extension. I try, occasionally I slip and I'll use the word overbought. I try not to use the words overbought here in the context of an uptrend because traditionally every good uptrend, every uptrend that really going back in time across any markets get overbought in uptrends. That's what they do, and they continue to stay overbought. Generally speaking, I tend to try and use the terminology of extended markets, which really speaks to if you are putting on new exposure here, where would you get out? What is the risk if you're entering in here? What are you trying to achieve? Where would you exit the position? What is your target? Of course, we're not all just trading the S&P 500. We're trading underlying stocks, but the extension and how far the market has moved from reasonable bases and so on and so forth. That's generally the way we try and look at market structure here. And again, already going, into the weeds than I probably would like to for this video. I think, when we just step back here and look at this market at its core, once again, yes, we are at new highs. Momentum is at new highs. Breadth has, is still supporting this market. We had a little bit of a stutter step last week, but it seems to be resolving itself nicely to the upside. The NYSE AD line, for example, is at fresh new highs again, 52-week highs, still very much ahead and outpacing new lows. So there is still very much to like here for the bull case. That doesn't mean that there aren't risks. That doesn't mean that we can't have a 1, 2, 5, 7% correction in the near term or larger. But it does mean that given what we currently have here for evidence, markets are continuing to snowball higher here, and there is still zero evidence of stopping. Where could it stop? This is something here where we would need to go down really to an hourly chart, and I think an hour or some type of intraday chart here. And I think this is a good line in the sand for you for those of you who are being really cautious or really defensive or really anticipating a pullback in the market. This trend line here, which extends from the new year, so this is all of 2018, is captured effectively in the slope of this trend line, and you can refine this and draw this as you see fit. The point is that you can draw this fairly steep trend line here and pay attention to a break when we finally start to break below it. And again, that doesn't, take that signal as you will. It doesn't mean, again, that we have to pull back all the way to the back, all the way back down to 266 or, even down here. It doesn't mean any of that, but it does give us a little bit of context about just the current ascent of this market. And if we start to break below there, if we start to get some consecutive closes or a daily close below this level, then I think you have a slight change of character, something that you might be able to very tightly manage risk if you are an active trader. If you're a longer term holder, you don't care about this. This isn't your time frame, and you're just sort of letting the profits, letting the market run higher. Hopefully you're involved in it. And you know, you wouldn't really care about those minor fluctuations. So I think that trend line is interesting. Otherwise, you know, the moving averages that you feel most comfortable with, and building some context from that. If you start to see things break below or retest those moving averages, that could give you some other signs of change of character. But for now, it's really more of the same. The Bollinger Bands here, if you were to throw on Bollinger Bands on this chart, you would see that we are actually riding above that upper 2 and 20 Bollinger Band. We're not outside of it. Those Bollinger Bands are really expanding up with some aggressive, with some aggressive expansion there. So we are contained within them, and this market is very much in the markup phase still. So that is the S&P 500. The IWM, not quite as into the stratosphere here as the S&P 500. You can see it's just today, well, really yesterday, I guess, breaking back above and closing back above the January 16th highs here from this outside bearish engulfing day. You can see we're finally getting back above that. Momentum MACD over here starting to make some new highs, but again, not as extended, not as frothy as the S&P 500. However, if we go to the Nasdaq 100, this one very much is in that camp of being fairly extended here to the upside. You can see a nice gap and go today, up almost 1%. A lot of earnings, favorable earnings, and some M&A and activity in the queues here that are helping fuel this area of the market to new highs here. But once again, very similar to the S&P 500, we would look at this and say, you know, very extended here to the upside. Momentum continues to build. Continue to trail that stop, manage that risk, and be selective or diligent when putting on new exposure. So that is the market environment overall. Bulls in charge, and continue to show no signs of slowing down. If we get into some of the other major markets here, we'll see TLT, which is still holding above this 123 level. This is a big level. We've talked about it. It's been tested many times over the past year or so. It is still holding bearishly aligned moving averages. You know, the bulls are on defense here. They're trying to support this market once again at this level. It's yet to be seen whether or not we will eventually come crashing down through it, or if we will successfully hold and make our way back up to the top end of this range. It's been tested quite a bit, so you know, it'd be very interesting to see here. And I think if we start to lose these lows here right around 123 or so, it's probably some actionable shorts that you could try and layer on here for continued breakdown. If we go to some commodities, USO breaking out of this nice 6-day consolidation. You can see it made a high up here around 1290, pulled back ever so slightly, and then today, following through of yesterday's sort of reversal candle, you can see we're making new highs again. So bulls very much in control here in the short intermediate term for oil. Natural gas, similar picture here, spent 4 days pulling back and then lifting up today on an uptick in volume. You can see the volume increase over this year, over the past several weeks, particularly on the up days. You can see getting some good volume here, and it's coming back into this heavy supply area. So we're going to be very interested to see how UNG handles this $26. I think this was what was this, a $7 level last time around, just because it's split recently. So it'll be interesting to see how it handles some of this recent supply in here. But so far in the short-term trend, bulls got momentum behind it and continuing to move this market higher in the short term. Finally, the metals, gold breaking out here, 50 basis point move after a little, several day check back here to some of these fast moving averages. Is once again making new closing highs on the year. And silver, nice recovery. It had this gap down. I think it was down almost 1.5–2% or so in the morning, and it did have a nice recovery. I do like this bar. Silver is interesting to me. I know I was previously sort of in favor opting for gold, which I still sort of am from the structure basis, but I am aware that there's a lot of supply right in here that if it can start to clear, I think we could get a nice kind of momentum burst there through this through this 16.25 level, 1630 level, these recent highs here. If we can start to take out all this supply from November, I think this starts to look pretty interesting. Might be a trade that I would be eyeing myself to participate in. We'll see if we can get that move in the coming days or weeks set up for us. So that is everything. Actually, we're going to skip the sector analysis. So hopefully you guys are doing well out there. This is a little bit of a lighter update for you midweek. Not much has changed. Bulls in control. happy trading and navigate those earning seasons. If you like this video, do subscribe to our channel on YouTube. We publish these videos a few times a week. Thanks so much for watching, and talk to you guys on Friday.